evening, all. Ira Epstein, and here we are on November 7th, 2023. I am not in my studio, as I've told everybody. I will be out the next few days, returning this Friday, so you'll see me Friday morning as normal. I already know that on Thursday afternoon, I'm not going to be able to do these as I have my flight back just when I'd be putting these out, so there's not much I can do about that. But Friday we'll be back to normal. Today is only Tuesday, so I'm hoping to get everything done for you tomorrow. So as you can see in the market, another day up in the stock indices, and this has got to be now 2 weeks of some of the best gains we've seen, but they're getting stretched, so nothing goes to the moon. Everything pulls back and has to consolidate. Remember that. We saw that Lucid didn't do that well in the aftermarket as their earnings came out, but Rivian had a good bid in the market afterwards. I'm still looking at Tesla up a bit. Still having trouble with pricing cars as I'm seeing them. Amazon doing what I thought, up another $2, and I'm looking for that to be strong going into the Black Friday and the holiday season, so I think that that's where you want to be. Now I'm going to turn my attention to BND for a little bit here, and in BND we're talking about, as you know, the Vanguard Total Bond Market Fund. And we've come up beautifully on interest rates and gotten a bounce. We're getting some distribution that is starting up here. As we take a look and go through the charts right now, you can see the swing line is still pointing up. And until you take out 69.44, this swing line low right through here, as I like to look at it and see how the markets are doing right there in this low. You're still looking at an uptrend in the market. How far could it go? Well, you could move up to the 70.87 level, the 100-day moving average of closes, and/or you might be finding your resistance at a better friend right here, the upper Bollinger Band. I'm going to repeat, if you haven't taken my enhanced Bollinger Band course, it's on our website at iraepstein.com under education. Go there. The course is about 15 chapters. It includes this exact software. It includes 2 weeks to my morning subscriber videos, which are not something you get to see here on YouTube and other parts of my website without being a subscriber. And it'll also include my written update. So the value of my charting software, the value of the subscriber videos you get pays for the course, which is just over $100. And I think you'll find that, I'm hoping you find that you learn something. But you're at a resistance point. Distribution can happen here now at any point in time. As we take a look at where the market's at in slow stochastics, it's overbought. So I think the pros have taken some money off the table. Could you keep running? Sure. None of my work is saying to go short, but it is most certainly saying take money off the table if you're long. In Rivian, as I said after the market's doing better right now, and it's fighting its battle at the 18-day average, and as you can see, right through here. So we have a battle 200-day average. We have a battle right through here fighting with the 18. Let's see what it can do, but I like the long side of this chart. In UGA, I have been bearish gasoline, heating oil, and natural gas. Markets normally drop at this time of the year, and they're certainly doing that, but you're entering a support zone in UGA. XLF trying to go to the upside right here. Okay. Will the market be able to hold on? Maybe. We will see what it can do in the financial services. Look, if you want to buy into a 200, 100-day average in Bollinger Band when you're overbought, be my guest. I'm the guy that wants to, if I had my client long it, I'd be telling him to come out of it right there. In XLI, lower low, higher high, lots of resistance right over the market through here, support back here, and overbought. There's no edge in this market as I'm seeing it for any new trade there. In SAI, I lost the title for some reason, but I'll put it in next day or so. You are at the upper Bollinger Band and a key moving average of resistance. Again, this is where I think pros are taking money off the table. In RSPD, all I keep reading about is the consumer is tapped out. As I'm down here and enjoying myself where I'm at, and it is sunny and beautiful, all I read is that. But we all know they just keep buying. Now, I did see today, if you looked at the Red Book sales, they did fall a bit. That's important. They went from 5% back to 3.1%. In the home builders, the market's up at a resistance zone. I would do nothing at all in that marketplace. This is where I think the pros are going to come out of the market. Energy sector, as long as China's acting weak like people think. They say this morning, S&P Global and others came out, and I've been watching World Bank estimates, that China will beat its 5% target growth, but it's going to have real problems after that next year, going to 4.6%. That is not bullish, all this. Then in the gold market, I'm seeing a market slip back towards the 18-day average. I expected the market was going to pull back a bit, and it's exactly doing that. Same in the silver market. Not places you want to be on the long side of the market from what I can see. And in the copper, again, if China's going to be weak next year, what does that say about copper? Although I do read how they're expanding their manufacturing and industry, and I guess that's where the market will be in better shape than most think. So we'll see if that can do anything for the marketplace at all. UUP, I don't know what happened to that chart. Got a bad quote just now. Look for resistance at the 18-day average, which means a flip-flop at support in the FXE. That's how I would sum up these markets. I will see you tomorrow. I've got to make these short because I'm doing them remote and they don't quite work the way that they do when I'm in my studio. Please take a look at this ad next on Enhanced Bollinger Bands and really consider it.